Welcome back to my market review series. So in this video, I'll analyze gold. Um, I'll also analyze the dollar index. So those two give me an outlook of the market, and um, they inform confluences uh, on other pairs that are on my watch list. So as per my last video on gold, the link is in the description. I happen to mention that we are range bound. We've been range bound for quite a while, as I've highlighted over there, and I also forecasted that gold will ultimately reach this zone before we see a sustained bounce up. And I bet we were at that point. Gold was particularly at this candle. That's about 2 weeks ago. So I say this zone right here is where I'm looking for bounces that are sustainable to the upside. So I'll be considering to take a long for gold. However, things are not looking good because let's zoom into the 4 hourly. So as you can see, we had quite a bounce. However, it did not break this structure right here. So for me to enter a long, I'd want to see this low taken out, then price to resume the origin for a trigger to the upside. Then, given that we are range bound, if this level fails to hold, um, I'm inclined to believe that we are going to visit the range lows, but I'm a level to level trader, so right about here will be one zone I'll be maybe considering and watching out for a bounce that is sustainable, and also right here, then ultimately the range loss. So the charts are telling me that we are likely to see more downside for gold, and in case of any changes, I'll make an update. So that's where I stand on gold. As you remember, for our last video, our shorts were triggered in somewhere here, and our targets were here, which has ultimately been reached. And it's good to be patient because since I made the last video on gold right here and called for this level, it's been, let's see how many days. The price has been quite choppy, and it's been a slow grind to our zone. It's been 26 days, about a month, 27 days. So about a month, yes, 27 trading days. That's a month on the calendar. So I stand bearish on gold unless otherwise, and I'll make an update. So on to the dollar index. The dollar index is I always analyze it uh, before determining which pairs are going to be on my watch list, because uh, it informs a lot of confluences when I later analyze my other pairs. So on the dollar index, um, so let me start by explaining all my levels. So this blue level right here is the previous month's low. This other one is the previous month's high. Then this dotted blue zone is the mid range for the previous month. So those are levels that give me context of the price compared to the previous month. Are we bullish for the month? Are we bearish? And as we can see, we are below the mid range of the previous month. However, even though we are at the mid range of below the mid range, we see that right here there is a order block that led to this aggressive move up during the previous month. And uh, as we know, price always retraces back to um, zones where there are probably more pending orders to push the price higher or lower depending on the bias. So as per price action of last month, this zone right here is a demand zone, and as you can see, price retraced and had an aggressive bounce. So this bounce was off my, so we're on the daily, sorry, being on the daily. right here we can see there's an inefficiency. There's a fair value gap between these two candles right here. And these two candles, this fair value gap is directly above this order block. So once price reached that fair value gap, it had an aggressive bounce, breaking the structure. As you can see, this uh, an impulse move to the downside, a pullback, impulse move to the downside, a pullback, and right here on this, after this bounce, price broke. So I know my chart is kind of dirty. Let me try and clean it up. Let me clean it up. So yeah, so impulse to the downside, pullback, impulse, pullback, impulse, aggressive bounce, and a break of structure. So that's what I like to see when considering sustained reversals of price. So in this case, as per now, price is bullish for me. So I'm expecting a, a sustained move to the upside. However, if this was a pair I could trade, I would be waiting for a trigger as highlighted by this arrow right here. So I'd be waiting for price to retrace back to this zone. I wouldn't want to see this low broken, then a bounce. And also this is liquidity to push us higher. This is buy side liquidity to push us higher. So the initial target for me would be this zone right here. So this zone is a daily order block. Let's zoom out to the daily chart and see where that came from. So yeah, so as you see right here, this is the origin of this really aggressive move. So this will be my conservative target for now. So given the metrics of those two charts being the dollar index and the gold against US dollar, I am inclined to believe that the dollar will rally and we're going to see a sustained move to the downside for gold. However, in case of any change in bias, I'll be able to update on this particular playlist. So the video for the previous analysis I did on gold is linked in the description. So the link of that video is in the description. If you're interested in seeing it, you can click it in the description.